Hello everybody, I'm John, this is JP Strategic Investments, and today we're going to jump into Patriot One Technologies earnings report. Now, I haven't been making videos for a while. I did kind of recently make a career change. I'm working a lot more hours, and my wife and I just had our second child, so really not a lot of free time right now, but I'm trying to kind of work my way back into posting videos more regularly. Nice to kind of jump in, start it off here with a Patriot One Technologies earnings report. So I'm going to kind of dive into these numbers. I got the spreadsheet up here that kind of shows us the last 4 quarters. One thing I do want to mention right off the top, in case you guys are wondering where I'm getting some of these Q4 numbers, because Patriot One in their report, they don't actually break out a lot of the Q4 numbers in their fiscal year-end reports. They kind of consolidate everything into full year numbers rather than Q4, although they do kind of break out a few of these numbers, just kind of general revenue, loss, things like that. But for the, all of the expenses here and a lot of these other numbers, essentially where I'm getting this is I had to kind of take the overall full year numbers that they gave and then subtract from that or basically all of the first 3 quarters to kind of extrapolate that Q4 number. And also keep in mind too, some of these numbers might look slightly different than what you would see on their actual reports, mainly the R&D numbers and a couple of the other ones maybe. That is because I am presenting all of this net of non-dilutive or COVID funding, anything like that. Basically, what I'm trying to do here is get a really clear picture of what the actual spending is, regardless of that spending was, partly covered by funding. I kind of want to see where actual spending is trending and things like that. I think it gives me a better picture. So just wanted to mention a few of those things off the top here so that you guys really understand what we're looking at. So just going to start from the top down. Obviously backlog, a big part of what we're going to be looking at as far as Patriot One's earnings. You can see total backlog did decline. We're looking at about a 16% decline quarter over quarter here. About 10% decline, compound quarterly growth rate there. But one thing that is a positive here, and kind of the main thing that I am looking at when I'm looking at Patriot One's earnings, is the platform backlog specifically, right? Because that's kind of the flagship segment of the company, right? The extract has been actually, in the short term, kind of the main revenue source, been getting those larger contracts. Although in the long term, what we're really kind of looking at with Patriot One is most likely that platform really overtaking extract and becoming the main part of this business. It's kind of the main focus of this business of Patriot One Technologies. Extract was really just acquired mostly to kind of enhance the AI and everything around the platform, around the smart gateway, the VRS, the visual or video recognition systems, and other things like that. But it has been kind of a nice short-term revenue gainer as well, and it will probably continue to bring in at least a decent portion of revenue. But really, platform is kind of the main focus for me right now, and I think that's what we should really focus on from Patriot One right now, because that's their main focus. That's really what they're trying to push, what they're trying to grow. That's their main business. So as far as platform revenue grows, you can see it's been growing pretty steadily over the last 4 quarters. We got 9% growth quarter over quarter, and we've actually had about a compound quarterly growth rate for the last 4 quarters. So very strong growth, especially year over year. And from what we've seen from some of the comments in the earnings call that I'll get to a little bit later on, I think we should expect that growth rate to actually pick up even further pretty significantly, but we'll get into that a little bit later. Revenue, going to kind of go down the line here again. Revenue, again, total revenue is decreasing, right? We saw a 15% decrease. We're still looking at about, 4% average quarterly growth rate there. So still growth. But again, extract kind of bringing that down. Now, the reason here I want to kind of touch on that with extract as far as extract's backlog, the revenue from extract, that's going to be a little more choppy, right? Because with extract, the contracts are a little different than they are as far as the platform goes. With extract, most of the contracts are one-time contracts. there maybe for a year or two. You get $1 million or $2 million for that year or two, and then it's done, right? And so you may get one or two of those here. You may get a couple back to back and then go 6 months without getting another contract. That's going to kind of break up and create some variation in the revenue and in the backlog that you're getting from that segment. So it's kind of going to be hard to really see any sort of trends there aside from looking at it from a very long-term perspective. So quarter over quarter, it's not really, these numbers here, the quarter over quarter change for Extract as far as the revenue and the backlog are kind of less important or less relevant than the platform. One, just because of that choppiness, and two, because the platform is going to be, again, the main segment of the business. So that's kind of just something I wanted to highlight there. Now, we also have signed agreements pending successful pilots. That too has been increasing very nicely. You can see 1.2 million, 1.6 million, 1.9. We have 19% growth quarter over quarter, as well as kind of a quarterly average growth rate of about 26%. So really nice growth there. And if you combine that obviously with the rest of the backlog here, that makes that overall total backlog growth and that platform backlog growth even better, right? One thing that I actually want to touch on here as well is they did change a little bit of the wording as far as how they kind of portray this metric in the report. In the presentation that they gave this time, instead of just saying signed agreements pending successful trials or successful pilots, they also said successful pilots or installation. And there's an important part of that I kind of want to mention, again, a little bit later in the video, but I wanted to touch on that there. As far as the expenses go, obviously, understandably, as the business is growing, the expenses are going to grow, especially in this stage of the company, where they're really pushing into commercialization, into marketing and sales, things like that. You are going to see a decent uptick in expenses here. You can see overall total expenses, we're looking at about a 17% quarter over quarter increase and about a quarterly growth rate that we're looking at right now of around 13%. Obviously, eventually what we're looking for is the revenue growth percentage to outpace or overtake the expenses growth percentage, and that's really when we're going to see that kind of shift and move towards profitability, right? We want to see this number here, the 13%, be lower than this 4% here or this 12%, because that's, like I said, platform kind of the main segment of the business there. So that's really what we want to see, obviously. And then we got net loss. Again, net loss also growing. We can see 27% increase from last quarter, about a 16% compound growth rate for that. So again, obviously once that revenue starts outpacing the expenses, we should see that start to maybe come back down and then move towards, hopefully, eventually, a profit. So that's kind of a basic overview of the numbers here, what we're looking at as far as growth, things like that. And a couple points that I want to touch on here, okay? So first of all, backlog. Again, I mentioned that some of the things there, this 9% growth quarter over quarter, I do expect that to actually increase. And one of the reasons is, as Peter touched on and Karen touched on the call, a lot of the major contracts, at least for sure 3 of the major contracts that they've announced recently over the last kind of month and a half or so. We had SAP, TechCU, Angel of the Winds. I think that was kind of the 3 that they mentioned. None of those, they said, are included in this backlog. So we know for sure we're going to get a big bump there from those. SAP, TechCU, that kind of combo there, probably a pretty significant contract win. So we should see a nice increase there. And some of what the stuff that Peter had been mentioning, if you guys remember in the webinar that they had a couple of weeks ago, where I was asking the questions, if I'm not mistaken, I'm pretty sure I remember Peter saying that just in the last month at that point, they had doubled the installed units that they had. So if you guys remember that, you guys can double check that for me if you guys remember that. If you don't, let me know in the comments below if you also kind of heard that same thing. But if that is correct, that would essentially mean, if we're talking double the amount of installed units, right? And this is where I kind of get into that note I wanted to touch on with the signed agreements pending installation. What I think we're seeing here is something similar to what a lot of companies do, where they don't actually recognize any revenue and they don't recognize the full contract until the units are installed or delivered to the customers, right? This is similar to what a lot of other companies do. And so if that is the case, what we are going to see likely with a doubling of the installed units is close to a doubling probably of potentially the backlog and also the revenue. The revenue is going to be a little less, sure for that, depending on, when those units actually got installed, right? Whether it was towards the end of the quarter, towards the beginning of the quarter, things like that. That revenue obviously is going to be spread out more so than just the chunk that's going to be put in the backlog. And obviously, this is subject to potentially some pricing differences. Obviously, if you're going to have a large purchase, like potentially the SAP arena, they might get a little bit better of a price than, somebody who's just buying one or two units. So there are going to be some changes there, but if we're seeing this doubling of installed units, we're likely going to see a very nice increase in the next quarter, especially the next couple of quarters, because Peter is also kind of hinting at that he expects this growth to continue. And especially with what we've seen from the agreement with Oakview Group and, how that is likely going to really speed up the process as far as the sales cycle, I wouldn't really be surprised if that were to happen. So looks like this probably this 9% quarter over quarter, this quarterly growth rate on average, I would imagine that's actually going to continue to increase, right? So not only are we going to see further growth, but we're going to see faster growth as well. And that should show up also, again, that should trickle down into the revenue line there. So that's kind of what I want to touch on as far as the revenue and as far as that note. The next thing that I want to talk about is the Goodwill situation, right? Because I think a lot of people are going to have questions about that. So in case any of you guys don't already know, aren't aware, Goodwill is essentially an accounting term that usually refers to a monetary amount that a company pays in an acquisition of another company that is anything over the net asset value of that company, right? So what's going to happen is, like, if Patriot One were to acquire another company like they did with Extract, like they did with II, right? They're going to pay for that company, right? And what's going to happen is there's going to be an analysis done where they take all of the assets of the company, right? Their cash, their equipment, inventory, property, any investments, etc., right? And they're going to take all of that, add it up, subtract from that any debt or other liabilities that the company has, and they're going to come up with, a dollar amount, right? That is what's considered the net asset value of the company. Now, anything that Patriot One were to pay over that amount, like for example, if they think the company is going to be bringing in even more revenue or profit in the future, right? That's where you might pay more than what the company is currently worth. That's what we do when we buy stocks in the stock market, right? We pay a premium, right? We pay, more than the current earnings of the company because likely we think the company is going to make more money in the future, right? So similar thing there if they think that, or if they value, for example, in this case, intellectual property, AI, some of the talent at the company, a little bit more than maybe just purely the net asset value of the company. Any premium they pay over that net asset value is going to be considered goodwill, and it's going to show up that way on their balance sheet after they acquire the company. So just to give you guys a specific example of this, we can actually look at the business acquisition form from, this is their acquisition of Extract, right? So you can see here, they've taken Extract's cash and cash equivalents, their receivables, prepaid expenses, deposits, property, plant, all of that, right? Added it up, subtract from that accounts payable, accrued liabilities, and you end up with this number here, the $1.067 million. And then you have all of this $21 million or so that they paid on top of that amount is considered goodwill, because that's over that. All of that is basically separate from just purely the net asset value of the company. So that is kind of what we're talking about here when we say goodwill. And so because they're valuing the company at that much, when they acquire the company, then they put that value on the balance sheet, and that value goes under the accounting term goodwill. So that is what goodwill is. What they've essentially done here in this analysis, and we can actually go here, they kind of give an explanation here in note 10 of the financial statement. So if any of you guys want to look at this, it's in the in their documents, note number 10 of the financial statements. They kind of go over exactly their reasoning for writing this amount off. And the main reason, or definitely one of the main reasons they gave, and Karen kind of touched on this on the earnings call, is what we're seeing kind of in broader market conditions. A big part of that is inflation, right? Because the way that they do this analysis, they have to do what's called an impairment test of the goodwill every year. And what they're doing, the type of analysis they used is called discounted cash flow analysis. And essentially what that does is it uses a discount rate, right? Which that discount rate is determined by interest rates, it's determined by inflation. And they're essentially discounting the future value of their current cash and of what they think might be their profits, right? And so what that means is, if we have higher inflation, right? Inflation reduces the value of money, right? It decreases or discounts the value of money. And so what's happening here is, if they had done this analysis, which they did do last year, right? Just from this year, the amount of inflation that we've seen, the amount of risk in the market, interest rates, right? Just from factoring in purely those numbers, they're going to get a much different number than they did last year, purely for that reason, regardless of any thing specifically with the company. Just from the change in interest rates, the change in inflation, market conditions, things like that, the cost of debt right now, that is going to dramatically change their analysis and that kind of impairment test that they have to do. So a large part of that was simply due to just the general economic and market conditions, and maybe some of that was kind of some of the things that they were looking at with the company. Obviously, they're kind of factoring in some company specific things here. And I do plan to maybe kind of do a little bit of a deeper dive into specifically how they came up with, the 7 million number, the specific 25 million, things like that. Maybe I'll do a little bit of a deeper dive. But, as far as, whether the company is going to be successful, I don't think this is really going to be a major factor here. What it does do is it does affect some of the, if Patriot One were to be acquired, obviously their balance sheet is now $25 million lower. But to be honest, if a company were looking to acquire Patriot One, or if any investor is using any of the metrics that would use a balance sheet or that would include the goodwill in making an assessment of whether they're going to invest in the company or acquire the company or etc., they're probably, if they're smart, they're going to do their own analysis of whether or not they think the value of that goodwill actually makes sense. And so regardless of, Patriot One could put $100 million on their balance sheet as goodwill, that doesn't mean any company looking to acquire them or any investor looking to invest is going to have to take that at face value, right? And so, Patriot One is kind of just making, also on top of, all of the analysis that they did and their other reasoning, they're essentially kind of making that decision for the investor for them. They believe, based on current market conditions, based on everything else that's going on, and, obviously maybe some company specific factors, that this is the best decision to do. So that's kind of what's going on with the goodwill there. Just, a few more things that I want to touch on. There were a lot of questions, and obviously people are looking a lot at the stock price right now. Just me personally, right? Peter has mentioned, Karen mentioned, they're really highlighting this, that Patriot One, if you look at it year to date, which I have the chart up here right now, they're up 13%, right? Over 13% right now. Most of the market is not up 13%. In fact, most of the market is not even up. It's down, right? I was actually talking, with my brother just about a month ago or so, and he owns some Patriot One Technologies in his portfolio as well. He does his own investing, and we're both talking, and both of us talking with other people and hearing that their portfolios are down, and some of them down pretty significantly over the course of this year, whereas both of us, we're pretty much over the last month, we've been flat or maybe up a little bit. And a large part of that is due to the fact that Patriot One makes up a decent portion of our portfolios. And so when we think about, what are you doing to push the stock price up? What can we do to kind of increase demand for the stock, get institutional investors? I think one of the things that we really have to put this into perspective, obviously, Peter and Karen, they are obviously biased, right? They want to, make things look as good as possible, but really what they're saying is true, right? Look at the stock, 13% up. Look at most of the rest of the market, it's down. So it is hard to say right now that, Patriot One isn't doing a good job of promoting their stock when their stock is performing, especially over, this year, better than most other stocks. So just wanted to point that out. And, I think also with kind of what we saw in this earnings report, some of the things that they're mentioning for contracts going forward, some of the partnerships and announcements they've made, I don't think we're probably going to have a problem keeping the stock up there. That's kind of just my opinion. The last thing that I want to touch on here is obviously the cash. One of the big questions with Patriot One, probably one of the reasons that the stock isn't up higher than it is right now, is because they obviously are very low on cash. And in my opinion, they will probably have to somehow raise some more cash. They're very likely going to reduce their loss going forward, but they're going to have to raise that somehow. Now, that doesn't necessarily mean, that they're going to have to dilute a large amount, right? Obviously, they have a huge amount of options with the shelf prospectus that they have. They have warrants, units, other things like that. And I think, especially with the demand that we're starting to see with, somebody like Oakview Group signing on this huge partnership, that is going to really set Patriot One apart. That's going to, bring a lot of eyeballs onto the company, onto the stock. It's definitely going to give them a really good measure of, confidence, a really good measure of, validation as far as what this technology and what this company could be in the future. And I think that's going to be very enticing for a lot of investors. So, while the cash position is definitely a concern, I'd be lying if I said I had no concerns about the cash position. I think we can probably, especially with the demand that we're seeing, we can probably assume that even though they are in a cash position, I don't think it's going to be something that's going to be where, the company goes bankrupt or anything. It may be something where we're going to see a little bit more dilution going forward. But if we do see that dilution, it will be what is necessary to make the company successful. And I think shareholders will still be rewarded in the future, even if we do see some dilution in the short term. So that's kind of what I want to say about that. I think that's about it. Overall, I think these earnings were pretty solid, and I'm definitely excited with some of the things that we've heard about next quarter, just the next year going forward, what we're going to see from that partnership with Oakview Group, and everything that they have going for them. So anyway, let me know in the comments below if you have any questions, comments. Like I said, double check with me. Let me know if you guys heard the same thing about doubling the amount of installations in that last webinar. Just double check that for me. Other than that, I'll see you guys next time. It's good to be back. Have a great day. Have a great weekend. See you guys next time.